Hello everyone. I'd like to address you in my default Zoom room today to wish you guys an absolutely fantastic Lunar New Year and an amazing time with friends and family. Recently, we've been working with quite a variety of citizenship types and thought it would be helpful to share our thoughts on what's in it for a Singaporean PR or foreigner looking to buy a property this year. I'll address PRs first, as we've had several clients asking us, should we wait to get our citizenship before purchasing a property? After all, we'll be able to save that 5% ABSD as citizens. Well, the simple answer is that Singapore's property market moves much faster than the 5% you'll be saving, especially if we enter into a property with high potential for capital appreciation. Just take last year's property price increase of over 10%. If as a PR, you had to wait for a year before your citizenship was approved, the time would have caused you to lose more than the 5% you'd have supposedly saved on your ABSD. We also know for new launches that developers tend to stage prices upwards, or the earlier buyers resell at higher prices during the subsale phase. So we take a look, for example, at Park Clematis. All the developer has to do is to increase prices by 5%, and that would have more than covered your ABSD costs. As you can see, from the same stack, what we get for a lower level was 16.7% more expensive within a matter of just 2 years. So for a PR entering as a first property, I would say the opportunity cost in waiting limits the potential you'll be getting from holding a property, especially if the citizenship part is uncertain or too long of a waiting period. Now, for PRs who currently own a property, a deeper thought process has to be taken, as they are currently sitting on a property where they might have actually paid the additional 5% ABSD. For this group to sell off their current property to go for a new one, they might feel the additional 5% is risk they are not willing to bear, especially for those that bought much earlier where no ABSD was incurred. One has to consider their portfolio then to see if the property they are currently sitting on is in a healthy position, with upside potential to ride through inflation and cover their financing costs if a loan is taken up. Otherwise, the benefits of switching up to a property that's performing may easily outweigh the initial cost on the ABSD. For foreigners, we see a different trend as break-even costs are now much higher with 30% ABSD even for their first property. We foresee this group to take a little breather, except for nationals of a few countries we have a free trade agreement with, such as USA, Iceland, Liechtenstein, Norway, or Switzerland. Nevertheless, Singapore properties are still viewed as an asset that will continue to increase in value over the longer run. The increased ABSD might not actually deter foreign buyers that much as it gets normalized down the road. For those who own existing properties, they may be less willing to part with it or value it even higher, as trading it off for something new would mean an additional 30% costs. Hence, we foresee resale properties at locations popular with foreign investors unlikely to come down, especially this year. Now, for Singaporean citizens looking at their first property, they would be the most unscathed by any of the recent cooling measures implemented, giving them the most number of options, especially at this point, before activity resumes and everyone starts to treat the new measures as the new norm. So we've got lots more to share with you. Feel free to reach out more for an in-depth market analysis. Bye-bye.